we're going to start the masterclass here for the MBZ model, starting off with a type 4 MBZ. Now, there's a couple core concepts you need to understand that are pretty simple, very easy to understand. And then from there, we'll move on to what's important and what to look for with this specific trading model that I've been using for a very long time now. So the core concepts that we're going to have to understand is going to be a fair value gap, just for this lesson here, and the way a candle forms, and that's pretty much it. After that, we can look for examples and details as to what the trading model actually is. So let's first describe what a fair value gap is. Very basic concept, but super easy to understand. Fair value gap is just a 3-candle pattern. Doesn't really mean much by itself, but if you have this as a point of interest for some type of reaction, that's where it can become really useful. So here, for example, we have a fair value gap. How do you identify it? Again, it's 3 candles. Very quickly here, you have a wick low, wick high, and the body in between that. That's going to be your fair value gap. Okay, so this is a bearish one, and the way you can tell is just by quite literally the middle candle direction. So don't think twice about it. It's just the middle candle direction, and that is the fair value gap direction. So because it's closed bearish here on the inside, we have a bearish inefficiency right here, just based off the OHLC candles. So it's a pattern, but very useful. Here is a bullish example. We have a wick high, a wick low, and in between that is your fair value gap. Okay. So before we start looking at other concepts such as volume imbalances, we're just going to focus on that basic concept, which is a fair value gap. And so now that we understand that, let's look at how a candle forms. So we have a bearish candle and a bullish candle. And this is actually a prime example of the actual trading model here. So bearish candle, price opens up here and forms a wick high, forms a wick low, and by the end of the time slot of the time frame you're on, price closes here. So that's where it closes, thus making it a bearish candle. Next candle opens up right here, because this candle just closed here. This candle opened up, forms a wick low, pushes up, forms a wick high, and closes right there, making it a bullish candle. So that's pretty important to understand. And now that we have all of those 3 concepts ready to go, we can then look at what the actual trading model is and what a type 4 MBZ is. So a type 4 MBZ is a continuation model. Okay, very simple to understand, but what makes it a continuation? Well, we're using a fair value gap to look for a continuation in the direction that this candle formed here. We're looking for a continuation off of that to take out any resting highs in this case, or any other potential target. So what should we look for? Well, based off what we just talked about, we have a fair value gap, and normally what's taught is to just look for an entry within that fair value gap and then hope for the best for a liquidity target, etc., or a target, right? But how can we refine this? Well, because this is a bullish gap here, you can see that because of the up close candle, we must wait for an opposing candle. So because it is bullish, we must wait for a bearish candle to form. So we have all of these 3 candles forming here. All of them are bearish. And after that forms, we then wait for a reversal. How does that look, and how can we define that logically so we know exactly what it is? Well, the way it looks is simply just by waiting for that bearish reaction into that bullish gap, and then we're looking for a bullish reaction. And the way we can tell is by simply looking at that bearish body, not the entire candle. So this would be the entire candle, the low and the high. We're just looking at the actual body. And we're not referencing any of these candles anymore. MBZ, which stands for medium body zone, is a 2-candle pattern. That's why you get momentum, you get quick moves off of these, because it's a 2-candle pattern. So it's pretty quick. So we're not looking at these anymore. We're just looking at this reference bearish candle and the body, just the body. So as soon as price closes, not past the entire body, as long as it closes past 50%, that is all that matters. And that is your MBZ trading model. So once it forms, we want to be long from this area and have the stop on the pivot low and mark it from the close. And so that's going to be our long area to then look for a resting high, and or if it's a bearish opportunity, a resting low. Now, before we just call it a day there, this is very important to understand. This is just a trading model based off a pattern. So how can we refine this and make it even better? Well, we have to use the higher time frame. So we can see here on the 3-minute with the indicator, it's going to plot it. We have a 3-minute MBZ. How can we refine this? Or how can we refine other opportunities and make this potentially a better opportunity within the market, and or possibly just not take the trade because it doesn't have a better probability outcome, right? And so based off certain historical price action and just how I've been trading it over a long period of time, you can go on Twitter X and just check out previous examples from the past couple of years. What's best to do is use the higher time frame alignment, okay? And so now it's a reality. We have an indicator here that does it, but let's fractalize this. And fractalize means just looking at this pattern on a different time frame and then looking to see if it's within that same area in the same direction. So let's look at, for example, we're on the 3-minute. Let's look at the 30-minute and see if we can identify the current direction there. So here we have a 30-minute fair value gap, okay? Before the indicator draws it, we're just going to plot this. It's a 30-minute fair value gap. We have the opposing candle into it. So it's the bearish candle here. And we can quickly identify just by eyeballing it, it closed above 50%. So this would be your 30-minute, in this case, MBZ, type 4. Again, it's a type 4, and we'll get to the other types with the next upcoming lessons and or videos on this, but this is your type 4 MBZ because, again, it's a continuation model off the fair value gap. So we can see it's forming there. But now, let's see if we can fractalize that opportunity when we go back to the 3-minute. So I'm just going to turn on the fractal indicator here, and you'll see that within this area, as we saw in the 30-minute, that is your type 4 MBZ off the 30-minute time frame, okay? And so what we should look for here is bullish opportunities, because this is a bullish type 4 MBZ, bullish opportunities off of it once it forms. So this technically formed, we can just go to the settings here and look at the exact time that it formed. This technically formed at around and confirmed at around 1 p.m. And so we're going to see here in a second, around 12:30, confirmed closed 1 p.m. That's when it confirmed, okay? Because that's when this candle closed. So after this time here, we can start to look for bullish opportunities. So here we can see we have a type 2 MBZ. We're not going to get into that in this video. And then we have an inversion for value gap. And again, we're not going to get into that into this video. But we can look for a continuation using the same exact fractal trading pattern and model. So this is a type 4 MBZ. Price held that area very well, pushed up, caused another fair value gap to form. And as we just talked about, this formed a type 4 MBZ. And so what we can do here is hop into a quick trade because now we're looking for a better opportunity, right? We have the direction, on the higher time frame. It's bullish. We have our fractal opportunity here on the current time frame, and so we can look for a long. But now we have to decide, okay, to make this trade worthwhile, and this is super important because again, we have everything in play here. We have the trading model, we fractalized it, it's a better opportunity, but we still have to decide to pull the trigger, because if there's no valuable target to have here, in this case, then we still really shouldn't take a trade. So we can put our stop on the pivot low, or just give it a little extra breathing room, nothing crazy, and look for a valuable target, because we want to make this, you know, depending on the risk to reward ratio, a statistical, in this case, based off your trade entries, etc., profit. So if we're looking at a proper risk to reward, well, we have to be right 50% of the time on a 1-to-1, and then even less on a 2RR. So here we can see, what can we target? We have this resting fair value gap here and these liquidity pools up here. So I'm not going to get into that in this video, but this is just going over the type 4 MBZ fractal model in depth here. So this is a bullish example, and you can obviously see how it played out. This is just bar replay, but you can see how we're pretty much ignoring any bearish opportunity and focusing on the bullish opportunities because of that fractal alignment. So anything bearish on the lower time frame, we're pretty much ignoring and focusing just on the bullish opportunities, because again, this is a bullish opportunity on the 30-minute. So let's look at today's price action, because this was a bearish opportunity here and a fractal alignment. So here we can see we have, again, a type 4 MBZ that formed. Price spiked into that, and we're looking for a continuation. So here you don't see a type 4 form within the zone here based off this type 4 MBZ on a 30-minute. And instead, we see it form much later on down here. Now, is this a safe opportunity? Well, this is a last leg move off the original expansion from the 30-minute time frame. So we have a 30-minute reversal area from this retracement, and prices continuing, especially after lunchtime here, a beautiful trend. We have a couple of opportunities, inversions, type 2 MBZ, but in this lesson, we're just focusing on the continuation method using the fair value gap, right? And so if we zoom in here, we can see in this example, we have a fair value gap between this wick, and this candle body. It's a bearish one. We should look for a bearish opportunity. But as we can see, it looks like price closed above it, thus invalidating it, right? So if you ever spot a fair value gap that has a complete invalidation, then you should not be using it for type 4 MBZs, okay? And that's just because it turns into something else, the fair value gap. But here you can see the indicator still applied. Why is that? Well, it's because it has a really small, in this case, volume imbalance. And so I'm not going to get too much into it, but a volume balance, just briefly here, is a 2 candle pattern. 2 overlaying wicks, and that causes your volume imbalance. So the price action in between that, with no bodies, just wicks, that is your volume balance. So because the candle closed right at it, the indicator still marks it as an MBZ based off the 3-minute time frame, because we're including that into the fair value gap. So that's what it's looking for. Now the question might be, well, you know, this type 4 MBZ happened way after this opportunity up here, and that's very valid. The better opportunities are always going to happen when you fractalize this model and you look for the same direction within that zone. Can you still take this? Yeah, you can, because it's within that direction of the higher time frame, but the better opportunities are always going to have an opportunity within that zone. So I hope that brought insight into a little bit of what the model is, and we're going to go more in depth as the lessons continue going. And so we're going to look at different scenarios, different market conditions, and first beginning with the basics. So that's a type 4 MBZ using fair value gaps, momentum based. It's a continuation trading model in this case because it's a type 4. And so in the next video, we're going to be looking at types 1 through 3 and getting the idea of what to look for in that case when we take out liquidity and we're looking for a liquidity sweep or a liquidity reversal. And so that's what we'll be looking for next. I hope this brought some insights into what the trading model is and how to fractalize it and how to look for the best opportunities.